Let's talk about bonuses and the environment we're living in today. This Bank of America story is kind of fascinating because obviously the trading revenue has gone up materially, and yet it sounds like the bonuses will not. What's happening, Kate?
Well, B of A is a bank that I've done some reporting on this year, Andrew, as you know. And I think part of the reason that employees were concerned this year about being asked to come to the office, among other things, when the virus was at its worst, in some cases on the trading floor, is that there was some hard feelings over pay. So I think last year, the feeling was that they weren't as well paid as they could have been. And there's this whole mantra floating around like flat is the new up. I think the agent you see operating this year is this sort of weakness in the retail and consumer aspects of banking across the board, which of course has a huge effect on B of A, which I think touches 1 in 2 American households in one way or another with one of its products. So the mere fact that trading businesses, especially fixed income on Wall Street, have done well may not be enough to ensure that people in other parts of the bank get good bonuses.
So, Bethany, let me ask you, when you think about sort of the bonus picture, how much do you think politics is going to come into this in terms of where we are in this moment? Because we are sort of, we're in the middle of a pandemic. There's that element. Yet the market has obviously run straight ahead of it. What can the banks do in terms of pay or not?
I think it's a really tricky issue, and it's going to be a tale of haves and have-nots on Wall Street in the sense that private firms are going to have an opportunity to pay people in a way that the big publicly traded banks are not, because the big publicly traded firms are wrestling with the overall political environment, and they're wrestling with their corporate clients who are struggling terribly, and paying huge bonuses at a time when your clients are struggling just isn't a good look. And yet the trading businesses at these firms have dramatically outperformed this year, as Kate noted. So it's going to be a tricky issue for the big firms to navigate.
Kate, though, the question is, can these traders effectively go elsewhere? Are we going to continue to see what's been described for a long time as the brain drain away from the publicly traded big banks towards the private equity firms, towards the hedge funds and the like, where, frankly, there isn't the same kind of scrutiny?
So I think that's an important part of the backdrop, Andrew. And I think we've seen some high-profile departures, just a handful recently. And I think that is indicative of the fact that it's a very tense kind of market for hiring. If you're an outperformer, if you're a great producer, you're probably always going to have job offers, and you may make a move right now, even though it means that your 2020 bonus will be impacted, especially if you're leaving early. Normally, you wouldn't see these departures, as you know, until the first quarter of the year after bonuses have cleared the bank account, or even the second quarter when people have a chance to catch their breath and really interview around. But I think there's a feeling that, we've had a very tough year economically. There are bright spots on the horizon over vaccines and perhaps more predictability coming out of a Biden administration. But that doesn't mean that we're going to be out of the woods for another 6 to even 9 or 12 months, depending on who you talk to. So it may not be easy to hop firms. You may want to stay where you are, even if you're unhappy with pay. And again, unless you're one of those very top players, at which point you're probably always going to have an offer. If you need one, you're going to stay put.
Shepard Smith here. Thanks for watching CNBC on YouTube.